Imagine a world where all central banks use the same digital currency. This could make global trades faster and more efficient than ever before. This is not a far-off sci-fi story. This could be the case with XRP, the cryptocurrency that is built into the Ripple network. We look at the pros and cons of XRP becoming the main currency used by central banks around the world. If this happens, its value could skyrocket to as much as $17,000 per unit. People often think that XRP is the same thing as Ripple, but it's actually the digital currency that runs on the Ripple network. The network's main goal is to make global financial deals of any size instant and almost free. Bitcoin was created as an independent digital currency. Ripple, on the other hand, is a fintech company that works with banks to make international payments faster. The Ripple network stands out by focusing on fast and efficient transactions. Most cryptocurrencies are designed to give people freedom from banks, but Ripple wants to work with standard banking systems. This could make it easier for more people to use cryptocurrencies in formal economies. XRP is a bridge currency in the Ripple system. This means that it can be used to quickly and easily trade between different currencies. Because it can do these things, it's a useful tool for central banks that want to update how they do things. Adding blockchain technology to state banks could change the way money is managed all over the world. When compared to standard banking systems and other cryptocurrencies, XRP has clear benefits such as being able to grow quickly, being able to handle large transactions quickly, and having much lower costs. The blockchain technology is already being tested by a number of state banks. For example, the Central Bank of France has talked openly about the possible benefits of digital currencies and has started to try different ways to integrate them. Because it has a strong infrastructure and already works with big banks, XRP is a great choice for these changes. If central banks start using XRP, the world's banking system might become more connected and work better. Using a single digital currency would make it easier for banks to do business with each other around the world by reducing the problems caused by different exchange rates and processing times. The speed of transactions is one of the best things about XRP is much more efficient than Bitcoin and Ethereum. It can settle payments in just 3 to 5 seconds and handle up to 1,500 operations per second. This makes it a great place for the kind of large-scale foreign transactions that happen a lot in central banks. On top of that, trades on the Ripple network are very cheap, often for less than a cent. Central banks and other financial institutions that pay higher fees for foreign transfers could save a lot of money this way. When it comes to long-term value, XRP also comes out on top. As it doesn't use the energy-intensive mining process that many other coins do, the network is seen as a better choice for the environment. Even though XRP has a lot of promise, it has had a lot of problems, mostly from regulatory bodies. Through XRP sales, the US Securities and Exchange Commission (SEC) has charged Ripple Labs and its leaders with selling securities without being listed. This has caused lawsuits that have had a big effect on market prices and investor trust. These regulatory problems show how unclear it is whether XRP is a security or a currency, which is a key difference that affects how it can be traded and promoted. Also, the unstable nature of the cryptocurrency market makes it less likely that risk-averse central banks will accept XRP. A global digital currency like XRP could have big effects if a lot of people use it. For foreign trade, it could mean faster transactions and less trouble with exchanging currencies, which could lead to more trade and faster economic growth. Developing countries stand to win the most. These countries' currencies are often not stable. A stable digital currency could make things more reliable and bring in more buyers from around the world. On the other hand, some people worry about becoming too dependent on digital systems and losing control over their money. For XRP to be worth $17,000, the market size would have to grow by a huge amount, well into the trillions of dollars. For this to happen, demand must be much higher than the fixed supply of $100 billion XRP. This can only happen if big banks around the world start using it. There are still different opinions among financial experts about this possibility. Some see the fact that central banks are becoming more interested in digital currencies as a good sign, while others warn against speculative bubbles like the ones that happened at other cryptocurrency peaks. There is one more cryptocurrency called XRP that is much faster and more scalable than Bitcoin. However, it does not have as much freedom. With its smart contracts, Ethereum, on the other hand, can do more, but it also has slower processing speeds and higher fees than XRP. Based on this practical comparison, XRP might be better for meeting the high-speed and high-volume needs of central banks, even though it doesn't have as many users as other blockchain technologies. How people think about new tools and how the media cover them are very important factors in how widely they are used. When the news is positive, it can boost investor trust and lead to more adoption. When the news is negative, it can have the opposite effect. XRP has been the subject of both positive and negative coverage in the media, and some see it as the next big thing in financial technology, while others focus on its legal problems and instability. How people react to these stories will have a big effect on how XRP moves forward. Several things will affect the growth of XRP, including the results of its court cases, the progress of technology, and the state of the world economy. In an ideal world, XRP would become standard in central banks, which would make it more widely used and raise its worth. On the other hand, ongoing problems with regulations and unstable markets could stop growth and lower its usefulness and worth. The idea that XRP could change the way global finance works is interesting and full of both possibilities and problems. The fact that this digital currency could be used by all central banks is a sign of a better and more connected financial future, but there are still big problems to solve. As we keep an eye on how this digital currency changes, the ongoing conversation between technologists, regulators, and financial experts will be very important in figuring out if the XRP network will really be the place where the future of finance happens.